introduce yourself, please, and your company, and what are you up to now?
Sure,
I'll
start. Jalak Jobanputra. I am founder of an early stage venture fund called Future Perfect Ventures. I launched it in 2014 around the thesis that the blockchain is the next internet. I started my venture career in '99 out here in Silicon Valley, so was fortunate to invest in the early days of the internet. And when I went to my first Bitcoin conference in 2013, was just as excited as the first time I logged into the internet. So we have 21 portfolio companies in the first fund. We were first $1 million into companies like Blockstream, Abra, BitPesa, and we're now currently investing out of the second fund.
Great. Thank you.
Sure, Mike Bucella, partner at BlockTower Capital. We are a crypto asset investment firm. It was co-founded by my two partners, Ari Paul and Matthew Getz. We invest across liquid markets and also venture equity. We are a team of 14 based in Connecticut. Thank you, BitLicense. And just recently opened an office in New York. But I joined the guys in October of last year. I spent the previous 10 years at Goldman, which made for a lot of headaches, I think, in this crowd this morning, allegedly. And yeah, so I've kind of been involved in this space peripherally for a few years, more intently in the last, say, year and a half. I don't have a 2012, 2013 story. My partners and co-founders do, but I was more of a markets-oriented person. When it became a market, it drew me in, and the technology has since kept me very interested and motivated.
Thank you.
Hi.
We are quite aware.
Yeah. So my name is Bobby Lee. I got involved with Bitcoin in 2011. Started mining. At the time, Bitcoin was really cheap. I regret not buying more. So I'm the co-founder, and I used to be CEO of a company called BTC China. That was the very first Bitcoin exchange in China, started in 2011. And then it recently got acquired. So it got acquired earlier this year, so I have more free time on my hands now. So this is my gap year, my sabbatical year.
There is a wider awareness of the digital currencies now, but what do you think, what has really changed from the very beginning until now, and especially, Bobby Lee, you?
Yeah, I remember in the early days, even the pre-2011 days, crypto was Bitcoin industry was really the crypto nerds, the cyberpunks, and they were really into trying to put out a currency that was digital, that had encryption and all that stuff. Think of like encrypted emails, PGP, those kind of hackers kind of days. And then, of course, it went to hobbyists. I would consider myself one of those, trying to do some mining on our own computers and GPU farms. And then mining, of course, became very industrial. And then the traders came in, the speculators came in. That was in 2013, 2014. People trying to short sell the market, trade futures. All in the meantime, in the background, there were the people buying drugs and paraphernalia on the internet, paying in Bitcoin. So there's a lot of payments action going on, mining action, trading action, and then of course in the last 2 years, there's a lot of fundraising action, ICOs, utility tokens, and now going to STOs. So I think it's shifted a lot over the last 7-8 years that I've seen, and I think it will continue to do so. So it has not gone mainstream yet. So we're still waiting for the day when it goes mainstream, when people are talking about, just in regular conversation. Yeah.
I was interviewing Bobby 4 years ago. You can still find it on Cointelegraph.com. All right.
Yeah, I would say Bobby has a much better insight into what happened over the last 7 years. For me, it's about really the last few, and I think, Ethereum was a huge lift for the market in terms of crowdfunding, right? So, it was a platform for project teams to go out, and once you saw the first successful project and your buddy got their 10x, you wanted to get your next 10x, and all these, there was a mad dash for capital with very little, I think, thought around creating useful things and building real projects and real teams. So I think it's a function of, now, and as I said for a while now, a bear market will be extremely healthy for this space. Because it'll really push out a lot of that, mad dash for capital without intent on doing anything, whether purposely or not, without creating anything of value. And now you have a lot of those, entrepreneurs that have kind of left the space, and you have entrepreneurs and people who are looking to actually build, and you have purveyors of capital who are responsibly allocating capital to the projects that I think are actually building interesting things. I think the other side of it, which is more important, I think, for both the recent past, and the future, is accessibility. So now there's an enormous amount of platforms now for you to both buy and transfer cryptocurrency, to store it. I think, Bobby, in the earlier days, it was much more difficult. Obviously, things like Mt. Gox happened, where you thought your assets were secure, and they were gone. And there were really only a handful of venues from which you could transact. And I think the accessibility between things like Robinhood, how Coinbase has evolved, you're getting a lot more. And I think there's just a lot more eyeballs in the space. Very quickly say, last year netted out to be positive for the space overall. I would say the one negative was a little bit of the rest of the world not taking crypto seriously, because of some of the project orientation and a lot of the buzz and folks really just completely speculating on nonsensical projects. But in the end, it put more eyeballs in the space, drawn a lot of capital, and now we're drawing in talent. Folks like Tim Wagner from AWS, who are joining Coinbase and really doing interesting things and bringing the next real talent pool of engineers. So that's exciting.
Yeah, so I'm somewhere in between when I got involved in the space in 2013. And I actually started actively investing in it after Mt. Gox, because I've always kind of believed that technologies, markets, psychologies need to be tested.
Right.
And what I saw in the wake of Mt. Gox is not dissimilar to what we saw a little bit of in January of this year, which was kind of the speculators, the tourists kind of disappeared, and the builders stayed, and they were more passionate than ever to make sure that this technology saw the light of day. And so I was very inspired by that, and so about half of the First Fund's portfolio I invested in 2014. And also invested in Bitcoin very actively then. So I saw a lot of building happening when a lot of the rest of the world wasn't paying attention. So 2014 to 2017, it was very heads down for the portfolio. And we've seen kind of the fruits of that labor in the last year in terms of not just the prices going up, driven by speculators and more awareness, but also real product development happening. And that's what's really exciting as an early stage VC, to see that we're going through a phase of testing different models, different crypto economic models, permissioned, I'm going to call them blockchains, but permissioned blockchains, more building on public blockchains. And so I think 2019 is going to be a very instrumental year when we'll see how many of these projects actually have legs.
Any price predictions?
I'm sorry?
Any price predictions?
Oh, the price. I was on there's a clip of me on CNBC in December calling the correction, which I'm like, doesn't take a rocket scientist to know that steep curve upwards was not going to be sustainable. I still believe that the Bitcoin blockchain is the most solid, the most tested, right. And really. Very kind of simple. It's not a simple implementation, but it's a very focused implementation versus something like what Ether and Ethereum is trying to do, which is a much broader platform with the smart contracts and all the security challenges associated with that. So, I'm still a believer in the Bitcoin blockchain and building on top of that, but I also think there are a lot of exciting other blockchains that are going to start emerging in the next few years for different use cases.
That's exactly our next question. So people want to grow fast and make it big. What do you think? Which players are becoming more or less important?
Yeah.
Michael has mentioned already, but... Yeah.
Sure. I think 10 years in, Bitcoin's proven to be anti-fragile. If I were to make a bet in 20 years, what survives Bitcoin, you probably slightly upwards of 50%, but there's always a chance something else takes over. I would say what's interesting now is people are focused on what is going to what is going to bring in the next million users of cryptocurrency, and whether that is a consumer-facing application with an underbelly of crypto that no one actually realizes they're interacting with the
Or
space.
the right marketing.
What's that?
Or the right marketing strategy.
The right marketing strategy. I think hopefully people are starting to see through the marketing strategies at this point. But for example, themes that are really taking shape and taking hold in this space are areas like gaming and non-fungible tokens, right? Digital collectibles. I think gaming is interesting because that's a substantial community where digital services and goods and even digital currencies are very native to the community. And so if you're able to tap into that existing network and create a public blockchain, or you have NFTs, digital collectibles that are transferable across gaming platforms, and there is no singular centralized force that could shut down a game and basically deem your assets valueless. That could be really interesting because it is very clearly an adoptive network of digital goods and services. So that's an interesting space that we are looking at. And I think Satoshi's vision of peer-to-peer currency is something that is actually viable now. The technology has gotten there. We didn't have that for quite some time. You have things like, obviously, you have off-chain scaling, which is creating a lot of excitement for having Satoshi's original vision. And I'm not a maximalist. I don't know if anyone is, and no offense if you are. I think it's fantastic channel to go through. I'm a relative value player. I think it's my old trading background. But those are two areas that I think are pretty interesting right now.
The original white paper is still available. You can take a look.
Yeah, so I'll comment, and I like what you said. I think the non-fragile nature is really important, that Bitcoin is really resilient. In the last 10 years, I've only looked at it for the last 8 years or 7 years, and it's really amazing. There's a lot of crap given to how, there is a fork, there's Bitcoin Cash, how there's scaling debates. It turns out it's inevitable. For something to survive, it has to have freedom. It has to have, basically, if we could have, people say, oh, we shouldn't have never let the fork happen, the Bitcoin Cash fork, or we should never let the other forks happen. But we can't do that. Even, like I said, I sit on Bitcoin Foundation. There's nothing we can do to have stopped it, right? We can only influence what we want to see happen, but nothing is in anyone's control. So the fact that we now see there's Bitcoin and Bitcoin Cash, maybe there'll be other things, or the fact that even Litecoin was an early derivative of Bitcoin, you couldn't have prevented that. And that's what proves that Bitcoin will be here in 50 years, in 500 years, right? I don't joke around when I say, hey, if you don't want to buy some Bitcoin, buy one for your grandchildren, right? And they'll be the Lord. They'll own like a castle.
Digital gold.
But seriously, right? Think about it. In 50 years, your grandchild, what's the population of the Earth? What is it, 20 billion? 21 billion? And there's only 21 million Bitcoins around. So, one Bitcoin will be quite something, right? Even though there might be 10,000 other varieties of altcoins and all that stuff. But because we're human, it can't be possible that all 10,000 altcoins will have equal value. Does that make sense? Just like the stock market, real estate, it can't be that all 10,000 apartments or 10,000 buildings in city of San Francisco will have the same value. Some will be more expensive, some will be less expensive. So there has to be like the big go-to digital currency. And for me, I'm a Bitcoin maximalist, I'm a pro-Bitcoin, so I'll say that's Bitcoin. Regardless if you agree or disagree, but definitely don't ignore this asset class as an investment. Oh, the other thing is I recently saw this movie, Crazy Rich Asians, right? Is that yeah. So they all made their money. The old money was all made in real estate, right? Raise your hand. At least in Asia, my parents, grandparents' generation, a lot of people in that age group became multimillionaires through real estate, right? So I think, give it a few generations, 10, 20 years, the rich people will be from crypto. The billionaires who made their huge family holdings from crypto. So anyways, I'm getting off a tangent. Yeah, I'm very optimistic about the price and all that.
What do you think? Does the cryptocurrency industry ever need stability? Go ahead.
Does it have a need for stability?
Do we have any chances?
Look, I think we've actually seen less volatility overall since the early days. I think, it's all relative.
Sorry to interrupt you. I'm sure you've all heard the recent news on Goldman Sachs, right? And look at CoinMarketCap today.
Right. So Goldman just stated that they weren't going to actively trade Bitcoin on behalf of their clients. But there's, I think the market always kind of overreacts to news like this. I don't think it's surprising for those of us that know Wall Street well, that they weren't going to kind of jump into it right away. So, we've seen this happen time and time again where, and I feel like it's accelerated over the last year as more people have gotten into the sector, more traders, and there's this kind of knee-jerk reaction to news. And I wouldn't confuse that with kind of utility or the fact that this is going to be around. We're just seeing market movements by just by how fragmented the market is right now in terms of the trading. So I don't trade. I'm not a day trader. I look at the long-term potential of the underlying technology, the different use cases, and then also the strength of the teams engaged. And if I look at all those parameters, we're looking at a lot of stability in the long term. It's I said it in the beginning, this was the thesis in 2014, it's stronger than ever, that I do believe that this technology, the underlying technology behind Bitcoin, as well as assets built on top of blockchain, are going to be way more powerful and way more valuable than what we saw with the internet over the last 20 years.
Yeah, I think we look at it through two different angles. There's kind of the liquid markets, hedge fund side, and the long-term kind of venture orientation. So I hope the volatility continues from a hedge fund trading standpoint. I will say it has dampened quite a bit. It went from 130 implied vol mid last year to something closer. It's realizing close to 50. So that's a pretty material drop off in volatility in the asset class. So from a trading perspective, I think like I said, as more accessibility comes into the market, options markets become a bit more robust. Market makers and the traditional market makers, not the folks that are market making deals, the folks like Acuna Capital and Susquehanna and Jump, the guys in Chicago and abroad. As they continue to enter the space, you have Goldman, who is moving forward in the non-deliverable forward space, which is an FX structure, and hedging with the futures. As long as there's a more robust trading environment, volatility will continue to come in, particularly amongst the largest coins. So all that is evolving around Bitcoin, and that may jump into Ethereum at some point, but really a lot of that's happening around Bitcoin. The rest of the market is a bit more difficult to judge in terms of volatility. It'll probably trade at some levered beta to what Bitcoin trades at for the time being, and those are kind of like liquid venture vehicles in my view. I think on the venture side, on the project building side, I think the market is it's sort of pockets of stability, right? So if you think about certain verticals like custody services, right? You have probably a half dozen highly credible projects that are working towards that one specific vertical, and they're doing so in a very measured way. There's from our seat, being in this space in more of an institutional manner, right? Us folks on stage and in the audience, you're really not focused on a lot of the noise that's happening in the space, and so a lot of that noise and we were
Who
talking
cares?
about, yeah, exactly, right? You're talking about these are day trading groups in the U.S., in Korea, right? There was a Facebook group of Korean mothers day trading, right? And that was an indicator at some point for trading. And
what does that mean?
Yeah, so it's like so one of our it was a contrarian indicator. But
Wait
one
a
of our
second, stay tuned and follow Cointelegraph.
well, one of our it's funny, one of our first traders that we hired, he's Korean. His mother had never bought a stock, but she owned Bitcoin in her life. She had never owned a stock. So that was great context. But
well, I know a lot of mothers groups that have outperformed a lot of the crypto hedge funds I know.
there you go.
So.
There you go.
Yeah.
Yeah, I'm sure.
Making more profit.
Yeah, I'm sure their performance probably trounces most funds out there. But really, I think from a stability standpoint, it has happened in the liquid market. I think on the project kind of more venture long term equity side, it exists in pockets of stability, and people are focused in certain verticals, and a lot of the noise, a lot of people aren't going to focus on. I mean, there's 2,000 listed projects, and most of those will go away, and there's more to come, and some
Who is
more of those
Google?
will go away. What's that?
Who is Google?
Who's Google's Google? Alphabet is Google. They're doing fantastic.
Yeah. So on the speculation and the stability side, here's what I tell people. People always come to me and say, hey, Bitcoin, that's terrible, the fact that it's so volatile, right? And I tell people, we're in a unique point of history where, if those of you were around in 2008, 2009, we saw the birth of a brand new asset class. The asset class, what we call now digital assets, digital currencies. So think about that. Before 2009 January, that asset class, the global value of it was literally zero. It's like witnessing the birth of a universe or birth of a star where the size is zero. Now, in science and mathematics, or in a perfect world, like a star or universe, it would expand, linearly in size over time. But with Bitcoin, the price, or with crypto, if you want a proxy for it, Bitcoin as a proxy for crypto, the price will not be a linear straight line from zero to some X amount, that's the eventual size. Because what? Because we're human. If we all knew it was going to be a straight line, we'd buy it up. It would just be, that high on day one. But then the people who are against it are fearful of it. So that's why we have these ups and downs and ups and downs. So on the log scale, a logarithmic scale, it'll go up and down like that, all the way eventually to this. It might take 50, 100, 200 years, right?
Think long term.
Take a long time. Because I do think this is a global permanent asset class, that Bitcoin's here to stay. Just like the internet is a permanent technology, it's here to stay, right? But with something like, volatile like that, it'll go up and down. But when we talk about orders of magnitudes more in price, don't let that scare you away. Really, don't let that scare you away.
I agree with that. It's if you take the traditional J curve of private equity or venture capital investing, and you harness all that uncertainty that exists in the J curve, and you make it immediately liquid on day one, there's not going to be very straight.
Well, if there's not opportunity, then you're not going to see that long-term opportunity. And having been in early stage VC for 20 years now, it's that's where the upside comes from, is getting in early and being able to withstand that, and stomach vacillations in the market, and now what we're seeing is it's just more accessible to a broader range of people, and you realize that most people can't stomach it when you see people leaving the markets. It's market psychology kind of on steroids we're seeing play out in the crypto markets.
According to Mr. Marco Strang, the founder of the leading mining company, he tweeted, "If you're not fast and smart enough in the world of cryptocurrencies, you out." Okay, we have these incredible speakers who changed the world.